Bloomberg Audio Studios. Podcasts, radio, news.
No matter what they tell us, no matter what they do, no matter what they teach us, what we believe is true.
It's 1998. My heart it is. Boyzone. They're at the top of the charts. The Labour Chancellor Gordon Brown faces his first full year in government and bond yields are more than 5%. Well, Boyzone are no longer top of the charts, so I really need to say that. But there is a Labour Chancellor at the start of this new year looking at gilts above 5%. Hello, I'm Caroline Hepker. You're listening to Bloomberg UK Politics.
And I'm Lizzy Burton. Now, it's a bit of a merry-go-round. The UK government spending more, borrowing more, while the economy is barely growing. Net debt stood at £2.82 trillion, 98.1% of GDP to be exact, in November. Debt levels last seen in the early 1960s. The government's deficit is higher than OBR forecasts, £113.2 billion budget deficit in the first 8 months of the fiscal year. The Labour government plans to sell more bonds this year, but it's coming at a time, Caroline, when the strong US economy means higher US interest rates are pushing up global bond yields for countries. And the UK's long-term borrowing costs surged to the highest level in more than a century over the past 24 hours.
It's a huge challenge for the Chancellor Rachel Reeves. So joining us to discuss this and what it means for the government, Bloomberg opinion columnist Marcus Ashworth and Bloomberg's UK politics correspondent Lucy White join us to discuss. Marcus, look, Lizzy started with a few numbers there to try to illustrate the fiscal position in the UK. For our listeners who are not knee-deep in the markets, why is a high bond yield a problem for the government, and why is it such a challenge for Rachel Reeves?
Well, very simply because they have to pay more back to investors. And I think that's the issue here we have to look at. Is the UK special here? And in some ways it isn't, in some ways it is. So the US bond yields are also very high, and we're pretty much around the same sort of levels. And that's been driven not so much by the strength of the US economy, a bit because it means the Federal Reserve may not cut rates so much, but really because they're spending awful lots and want to spend a lot more, which is precisely the position that this government is in and inherited. So the question is, will they borrow more? We'll find out on the 20th of January what their plans are probably going to be, or certainly is a big feedback meeting. But we expect next year they'll probably issue a further 10% more gilts, so something like 330 billion. The question is, the Bank of England is no longer buying these bonds in quite the way it was. Huge redemptions coming off. It's a lot of pressure on the investors and gilt market. They are getting paid for it, though. So in some senses, if the Bank of England were to cut interest rates more than perhaps the market's currently pricing, only 2 cuts, the Bank of England's trying desperately to tell the market it could be 4. UBS is saying it could be as much as 6. If those last 2 are right and the market is wrong, then maybe gilt yields. And today they're up to this high. Bear in mind, in 1996 they were up over 8%. So they can go higher. But equally, I think that if you see, this is a very good auction today. A lot of supply coming. The market's pricing for it. It's all about gilt dealers just making yields go higher so they can buy it nice and cheap. Good for them. They got lucky today. The question is, if there's a March budget, then maybe things will continue to get worse. But possibly, I wouldn't get too excited about just the levels today.
Lucy, before the election, Labour was kind of smug about how economically responsible it could be, and they kept talking about how the bond vigilantes came for Liz Truss at the mini budget. Do you get the sense now in Westminster the Labour government's actually quite worried they'll come for them?
I think it is dawning on the Labour government just quite hard a job they actually have. I mean, they've talked about the black hole that they found in the public finances when they came into power. But at the moment, Rachel Reeves is really limited by her own fiscal rule of not borrowing for day-to-day spending by 2029 to 30, that fiscal year. And that means that, you know, she's really left herself with very, very little headroom, under £10 billion of headroom in terms of meeting that goal. And as yields get higher, as borrowing costs get higher, that's really, really putting pressure on her. I mean, she has said that she's not going to come back in the spring in the spending the fiscal statement that she has in the spring, she's not going to come back with a load of tax raising measures as she did in the autumn budget last year. But, she's going to be under pressure.
She's got bills to pay.
Exactly. And, if it's not going to be, more tax rises, then that's going to mean more spending cuts. And that's going to, really be felt by the economy, by public services, by people.
I think she's going to get away with it. I'll tell you why she's going to get away with it. She won't next year round, but this time she will, because the OBR, Office of Budget Responsibility, decided to assess how the active quantitative tightening programme for the Bank of England would be measured. And they did it in a way where they have about 10 billion up their sleeves, so to speak, which if they recalibrate it later in the year, I think that Reeves has got about, certainly 8 or 9 billion extra there. Plus, I think she's got a few other things up her sleeve, so I think she'll get away with this time.
The other issue, though, to all of this goes to the heart of the Labour plan, doesn't it? And this is also kind of where you can draw parallels with Tony Blair and Gordon Brown and the Labour government then. It is all about growth. And, if the cost of borrowing, and you're borrowing more, you're spending more, and the cost of that borrowing is getting tougher, the way out of it is to earn a bit more, i.e. to grow the UK economy, and that's the kind of real challenge.
Well, you can't tax your way to it, and that's exactly what she's doing. And what she's essentially doing is moving capacity, or whatever you want to call it, away from the private sector towards the public sector. Artificially, that's going to keep GDP up, which means, and weirdly, the Bank of England will be less inclined to cut interest rates. She's doing precisely the two wrong things that she should be doing if she really wants private sector growth, and there's no level of improvement in productivity in the public sector.
And this week, if you look at the private surveys of the economy, if you look at Next's results warning about the effect of the budget on business, actually it speaks to what you're saying, Marcus, that the budget seems to be doing the opposite effect when it comes to growth. Let me ask you a left field question, Lucy. There is speculation that the Chancellor could be not safe in the government because all of the bad stuff seems to root back to the Treasury. Is that wild speculation, or do you sense that this theory that Rachel Reeves is going to have to do all the unpopular measures, the tax rises, and then she'll be off? Is that just far too extreme?
I think it's a little premature at the moment to be thinking about that. I mean, we have seen Labour's popularity plummet since they came into power, and that is due to measures that have probably come from the Treasury. The winter fuel allowance cuts, the tax hikes that we saw in the budget. But at the moment, if you follow Labour's plan, that does seem to be held widely by the cabinet, they don't really have any alternatives. If they want to project this image of being fiscally responsible, it's not going to work well for them to just boot out the Chancellor at the first opportunity.
No, absolutely. But then I listened back to Gordon Brown, full head of dark hair, 1998, doing the budget. And the contrast is so stark, isn't it? He was promising, we will spend only what we can afford. That was one of the famous phrases. And the other being, families could take home more of what they earn. I was really reminded when I watched a few minutes of that in just what a different position this Labour government is in.
Yes, but he came in courtesy of a very, very strong economy. He did the dividend tax rate on the pensions. He sold all our gold, and in a sense had a massively easier time compared to what Reeves has got. Look, she's in a difficult position. I totally agree with Lucy. I think she's there for as long as Starmer will tolerate her, but he'll certainly cut her before he cuts himself. But for the moment, they've just got to grin and bear it and literally hold on for the next year or two. If things, they are putting a lot of money into the economy on the fiscal side of the equation, on the public sector side, that may do some good for GDP. Whether or not the private sector goes into recession is the thing that will kill them. But they need the Bank of England to cut interest rates, and they need to get out of the way of the Bank of England to allow them to do it.
It's worth saying as well that we do have a few sort of markers coming up over the next few months. I mean, obviously, we've got the spending review sort of late in the spring, in which Rachel Reeves will set out the kind of spending plans for each department, and she is looking to before that to make departments find spending cuts. But we also have the industrial strategy that will come alongside that, in which she's going to be essentially. The government is going to try and focus on particular areas of the economy that they want to be able to help out, that they want to grow, that they want to kind of fund that growth. Whether that's actually going to be helpful or not, I don't know, because, we've not seen the British governments have particular luck with industrial strategies over the past few years, and we've seen very many of them. But, there are a few things that can be moved in the meantime.
But you're giving a lot of agency here to the UK government. Of course, gilts operate in a global market. Marcus, can the UK really shield itself against the influence of the Treasury market? And we've got Donald Trump coming to the White House.
A very searching point. My big call for 2025 is the dollar is going to weaken and bond yields are going to collapse.
Oh.
And that is determined by really what I think Donald Trump will want to do. And literally, I think the hedge funds have got themselves built into a very big short in the US. Their proxy trade, where they spread their risk, is I think they're quite heavily short the UK as well. Why not? It's got similar dynamics, possibly worse. But I think there's a reasonable chance that bond yields could snap back round. But it is all driven by the US and what happens there. And we are unfortunately just cast adrift without really any purchase or any control of our own destiny, much as the same as Europe.
Yeah, I mean, that is a really big call for 2025, isn't it? Lucy, I mean, this is the kind of big and boring problem, isn't it, that the government's got to deal with? And yet there are so many distractions. Donald Trump, it's also Elon Musk. It's all the issues around trade, around migration, and it's channeled very pointedly right now via Musk and Farage, whereas, the stuff that we're talking about, the kind of financial side of it, is the difficult and kind of dull bit, isn't it?
Yeah, exactly. We are seeing a lot of these distractions. I mean, from the trade perspective, the UK is not likely to be super high on Donald Trump's hit list. We don't have a huge deficit with Marcus is praying there. There's many countries, Canada, China, Germany, who are likely to, fall foul of Trump's ire before we do. But at the same time, we can't discount ourselves from the fallout of that, I suppose. If Trump is levying huge tariffs on China, then where's China's excess supply going to go? Is that going to mean dumping of various goods in the UK? Is that going to damage our own manufacturers? So, I mean, there's a lot of unknown at the moment. There's a lot of questions around how much Trump is going to stick to the promises that he made before he was elected. So, there's a lot to be seen yet in 2025.
I think if we've learned anything in 2025 so far, it's a year of volatility, uncertainty ahead, and unfortunately we're having to mind every post on social media in these times. But both of you, thank you so much for setting us up for the year ahead in the gilt market and what it means for the Chancellor. Bloomberg opinion columnist Marcus Ashworth and Bloomberg UK politics and economics correspondent Lucy White, we thank you.
Now, that's it from us for today. If you like the programme, don't forget to subscribe and give it 5 stars so that other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by James Woolcock, you can tell because of the Boy's Own intro, and our audio engineer was Sean Guastamakia. I'm Lizzy Burden.
And I'm Caroline Hepker. Yes, dreaming of the 1990s. We will be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.